Hey everyone, welcome back to Finance Bro University, brought to you by Mangosteen. This episode, we're going to forecast the future of MSTY and Winter, and we're going to use the 15 years of experience I have in finance and the 8 years of experience I have in Bitcoin, and our fundamental understanding of MSTY and Winter as derivatives of Bitcoin and MicroStrategy to make forecasts about their future so that we can see under what circumstances MSTY and Winter are good investments and maybe under what circumstances they are not so good. So come on this journey with me. If you're not familiar with Finance Bro University is the new paradigm in finance. We're going to master the old rules and then we're going to break them. As stated, this episode is about forecasting MSTY. We're going to go back and revisit briefly the underlying mechanics of MSTY and Winter. We're going to forecast MSTY and Winter out into the future, and then we're going to have some conclusions moving forward about what the best use of capital might be. And of course, for context, link to my previous videos are in the description. They will be helpful in helping you to understand where we've got to come to this current episode. If we briefly revisit the MSTY Winter mechanics, we discussed through reviewing the interviews by Marcos Miller and Jay Pestrochelli that MSTY and Winter have payoff profiles that look like this, where MSTY and Winter operate inverse to each other. MSTY gives you an option premium so long as the market's generally going up, and Winter will give you an option premium so long as the market's generally trending downwards. And of course, we also discussed that 50-50ing them is not a great market position because what you are doing is essentially shorting volatility. You're collecting the premiums of both assets, but you're being exposed to the equal downsides. If Bitcoin's price goes up, MSTY's going to do okay, but Winter's going to get smashed, and vice versa. If Bitcoin's price goes down, Winter's going to be okay, but MSTY's going to make a lot less money, and it's going to be generally all-round painful. We also measured the market beta of MicroStrategy versus Bitcoin, I suppose now named strategy, isn't it? But we have a 2025 year-to-date beta on Bitcoin of 1.48, with that rising beta over the last few years reflective of MicroStrategy continuing to tension or ratchet up their balance sheet exposure to Bitcoin. And so here we have the MicroStrategy beta versus Bitcoin at 1.48 for 2025 year-to-date, where these daily returns I've linearized into this equation with 50% explained variance, which in finance is incredibly high. And then we can also relate MSTY to MicroStrategy through its beta, and we can see that it has a 0.72, and we've got to factor in these negative returns, which are a reflection of the ex-dividend date, right? There's obviously a date when MSTY pays out a dividend to its shareholders. In order to avoid dividend arbitrage, its price must go down to reflect that that dividend has then been paid out. We can also relate Winter to MSTY and to test whether it is a good inverse. And what we can see is that Winter is in fact a very good inverse of MSTY. It has a coefficient of negative 1.06, which is very, very close to an ideal inverse of negative 1. And that is when you exclude these dots here, which are the ex-dividend dates. These are the dates where MSTY and Winter go down at the same time together. Why? Because they have the same date that they pay their dividend dates, and they both have to go down to reflect the fact that a dividend has been paid out. And so they go down, and that is what this red dots represent. So when we exclude them outside of the ex-dividend dates, MSTY and Winter are good inverses of each other. And we can model this. And with an explained variance of 0.5, that's not too bad as well. So if we can relate MicroStrategy to Bitcoin, and we can relate MSTY to MicroStrategy and Winter to MSTY, we can create various forecasts under different scenarios of Bitcoin. And this is the point of this episode, is that we're going to take a whole bunch of scenarios and we're going to run them through Bitcoin and then through MicroStrategy and then through MSTY and Winter, and we are going to see what a potential future could look like for all of these products. Super exciting. So before we run off into the sunset with our big, powerful forecasting models, let's just do a little sample to test and validate that this forecast model or methodology is reasonably close to actual. So if we take this modeling and we pass it through Winter and compare it to actual Winter, we get the following price forecast for since the launch date of Winter down to early August when I downloaded this data. And we can see that things follow pretty closely. There just seems to be a bit of a gap here generated by like a random offshoot return day. But overall, it is a pretty reasonable forecast and follows the dynamics pretty closely, which I think is great, right? Like it shows you that the modeling of some of these financial instruments is really not that out of the reach of someone who with a bit of Excel skills. So, this might inspire you to do some modeling of your own. So with this brief comparison of actuals, I'm confident that this simple forecast model will have sufficient fidelity for us to see the underlying dynamics of MSTY and Winter in future forecasts given certain scenarios, rather than being an exact forecast of the exact price on that exact day. So pretty happy with it. So forecast 1 and 2 are Bitcoin hits 200K or 500K and then goes into a bear market in 2017 style market data. Forecast 3, Bitcoin continues its general climb and the 4-year cycle is no more. This is kind of the hypothesis that a lot of people in MSTY have, that Bitcoin's not going to have these big drawdowns anymore, and we're just going to sort of slowly traipse up into the stratosphere without any massive pullbacks. So we're going to model that as well. And then forecast 4 is Bitcoin hits 200K and then goes into a bear market using the 2021 data, and Bitcoin hits 500K and then goes into the bear market using the 2021 data as well. So the idea of the 200K and 500K are just sort of general low and high bands for each of these scenarios, with the 500K being based off this premise from Plan B that the stock to flow model is a relatively good measure of Bitcoin's value, and this cycle the stock to flow would predict that Bitcoin would hit a 500K price, which would be a upper reasonable bound for Bitcoin, but we don't know, right? We're very late in the cycle. I don't see us going to 500K, but I thought I'd just introduce a very, very high example and see what played out. So with that in mind, let's forecast Bitcoin's price out using the data that we described in those scenarios. Here we have the two 500K scenarios using the 2017 data and the 2021 data. We have the slow climb up of Bitcoin's price, which I've just used a repeat of the last 18 months or so to have a similar sort of vibe. And then the 2017 data and the 2021 data using a 200K peak and then going down into a bear market. Now, if you're wondering why I chose to use actual return data to create these forecasts, the reason is that financial returns are not normal distributed returns. They have a whole bunch of distortions in them reflective of the fact that they're a non-linear process. And so the easiest way to recreate that is just to use actual data rather than go through the rigmarole of creating a signal line and then artificially adding this like non-linear distributed return profile to that data in order to get something that's reasonable. So it's just simplified the modeling approach given the time capacity that I have to work on this. So we can see those examples here. Now let's understand how they affect MicroStrategy, MSTY, and Winter. So here we have the forecast of MicroStrategy under these different circumstances, where we see the 2017 and 21 data with MicroStrategy peaking at a little over $3,000, which would be a great price, wouldn't we say, but then coming down pretty quickly into the $1,500 range. And then the slow climb up, which gets it to about $1,400. And the in a 200K peak base using the 21 and 2017 data, we see it peaking at around $700 a share. Now, that is how MicroStrategy should evolve under these different circumstances. So let's spend some time deep diving on MSTY and Winter. So here we have the first three scenarios where we have forecast 1, Bitcoin hits 200K and then goes into a bear market 2017 style. Then Bitcoin hits 500K, goes into a bear market 2017 style. And Bitcoin continues its general climb and the 4-year cycle is no more. And we can analyze what MSTY and Winter would do under these three scenarios. So here we have MSTY coming up and hitting $32, $33 a share. And then as we enter the bear market, we come down very, very quickly, and it quickly goes down to around $5 a share when it finishes up this 18-month forecast. And it's picked up a little bit as we've come back into warmer market territory with Bitcoin's price suddenly appreciating back up. And Winter has maintained its price through the bear market and then peaking up a little bit briefly when we have this sudden drop, and then quickly diving down into the $5 range as well as the warmer market turns its price sour. Again, we have Bitcoin goes up to 500K while MSTY hits $75 a share, which would be amazing, right? And then quickly dives down to $20 a share as we have that big pullback down to around $150,000 Bitcoin price. And then throughout the bear market, MSTY continues to weaken and weaken and weaken and is down at $5 a share by the end of that bear market. Winter takes an absolute dive, right, as the strong bull market destroys its NAV value. Does a good job of hedging out this loss, but as you can see, the amount lost by MSTY is massive compared to the amount gained by Winter, which makes rebalancing MSTY and Winter really, really difficult and actually kind of that high value as you don't make the same sort of gains on the up. Remember, you're capping your upside for full downside exposure. Then we run through the bear market. Winter continues to maintain its price while MSTY bleeds, and then we get back into warmer market where MSTY starts to come back up slowly. But obviously, there's no way that you could really recover from this $5 a share unless you had some sort of absolute massive windfall in Bitcoin, at like suddenly popping from 150 back up to probably 600 or 700K in order to come back up to maybe $30 a share or so. So that gives you an understanding of how MSTY and Winter are going to struggle with any sort of bear market while they distribute out dividends all the time that are going to continue to knock down their NAV value. And this is why yieldmax considers the money that they pay out in dividends a return of capital, right? Because they're not necessarily generating this income. The yield that they're quoting at this gross yield range is not that sustainable. It always seems to come back to NAV erosion. You need this ever-growing Bitcoin price in order to maintain the NAV or principal price. And here we have the scenario that people are most interested in, or the strongest thesis will actually occur, and this is why they're investing in MSTY, which is this continual rise in Bitcoin's price over the next 18 months without any substantial drawdowns. And we only have that sort of reasonably large drawdown that we had in June, was it June? May, June, and then we come back up and things are all good. So in this scenario, you can see this flat period for Bitcoin's price is really adverse to both MSTY and Winter. They both are distributing out more than what they can actually recover in terms of income, and so their prices are both declining. We get a bull run. The bull run absolutely annihilates Winter, right? Winter takes a dive while MSTY recovers some of its value, and then we go into a bit of a bear market. Winter manages to hold its value through that while MSTY gets wrecked. And then we go back up into an upward market where MSTY maintains its value. And you can see that things are broadly flat. We're trading at $16 a share here, where we started at around 20. And you can see that it's kind of a slow grind down. You know, we're getting good returns. The NAV, or the principal of the MSTY, is being reasonably maintained, but it's requiring Bitcoin to continue up at a very high rate, 300K. And if it wanted to maintain that next year, then the next 18 months would have to see it go to like 900K. So it's a really, really high or tall ask for Bitcoin to do to continually climb up at this huge rate faster and faster and faster in order to maintain some NAV or some principal value of MSTY. And we can see the results here tabularized, and we can compare them to the buy and hold return and the MSTY buy and hold return. And we can see that in 2 of these 3 scenarios, we make good returns, and they exceed that of Bitcoin in scenario 2. But otherwise, any favorable market returns, Bitcoin and MSTY and MicroStrategy will outperform owning MSTY. So here we have forecast 4 and forecast 5, where Bitcoin hits 200K and then goes through a bear market 2021 style. And Bitcoin hits 500K and goes into a bear market 2021 style. Now, what we can see is something that I think is really, really important for people to understand, and I don't think people quite appreciate it. Now, we have Bitcoin coming up, hitting 200K, going down, and then coming back up to that 200K band, just like we did in 2020, 2021, where Bitcoin hit 60K, came back down, and then got up to like 63K, and then we went into bear market finally. Now, the interesting point to note here is that MSTY comes up, it comes down, and then it never recovers, and it doesn't recover back up to that top price that it once had here after a loss of momentum. And that's the thing to really appreciate, is that any loss of momentum in the Bitcoin market is a permanent loss in MSTY. And so if you have a little bit of sideways movement, that's just going to eat into your MSTY NAV or principal value, and it's going to be like generally a very bad time. And we can see here that Winter gets hit, it comes flat with the flatness of the market, and then it gets hit again with the bull market, and then just through the bear market, it's only really managing to hold its value. And so these products aren't really performing because they've got to ship out all this dividend premium that they're paying back to you, right? So here we can explore the forecast where Bitcoin hits 500K and then goes into a bear market in a 2021 style event. Now, we have the exact same behavior again, where we come up, MSTY comes up with the Bitcoin market, but we come down and then we come into a recovery at like a 2-peak market, but MSTY doesn't manage to keep that same price level as it's eroding that principal value through dividend payouts, and then we come down into a bear market. Now, the result of this is very favorable, right? Now, if Bitcoin suddenly goes to 500K and then manages to get to 300K, MSTY is going to maintain its principal value. So in order for MSTY to maintain its principal value, it's going to have to be in the hundreds of thousands of dollars in the next 18 months. Otherwise, we're going to have a bad time. And I think that's a really good case for like why MSTY is probably not as amazing a product as people think, and that you're not all going to get rich off MSTY, because this NAV erosion is so powerful that even if Bitcoin were to hit 300K in the next 18 months, you're probably at best going to maintain your NAV premium, which is exactly what we saw in scenario 3 or forecast 3, where Bitcoin went up to 300K as well, and the NAV premium managed to stay at about flat. And so that's what we're having to achieve on Bitcoin's terms without really any loss of momentum in order to maintain the NAV or the principal value of MSTY. Here are the results of each scenario summarized in a table where we can see the return of MSTY and Winter in each of these 5 scenarios, as well as Bitcoin buy and hold, MicroStrategy buy and hold, and the Mangosteen framework when applied to Bitcoin or MicroStrategy. And what we can see is that you get a various return levels depending on what's going on in the market, with the only exception that the Mangosteen framework always wins and always makes money, and makes money far in excess of the returns of any of these other strategies. And this is why I gave up on trying to build a MSTY Winter rebalancing tool, because the results were so inconsistent, and I was already had a product that could make really good returns on Bitcoin and MicroStrategy. So I went and said, hey, look guys, I don't want to be making videos with one audience who want to follow me with Bitcoin and say, hey, we've done really well, we've made all this money, and then for me in the second breath to go and do a MSTY Winter video where I'm saying, hey guys, maybe we lost money slower than what we would have if we just held on to MSTY buy and hold. And so it became really obvious that I wasn't really going to create an inspiring value proposition to the MSTY audience by getting them to try and rebalance MSTY and Winter. It was just going to be a suboptimal version of the product that I already have. So with that being said, the Mangosteen framework will outperform MSTY buy and hold in every single market environment. It's better than owning MSTY. Under all circumstances, the original Mangosteen framework outperforms owning MSTY with the flexibility on how you draw the income, whether you want to use it to draw off and use as income and have 0% compounding, or whether you decide you're not going to draw anything off and you're going to allocate 100% of it into compounding your stack. Your personal preference will dictate your approach. And so this is why I got rid of this idea of trying to rebalance MSTY and Winter. I just said, look, I already have a product that does and fulfills the needs of the MSTY Winter group. It's just that I'm going to have to change the dream a little bit, right? It's not about owning MSTY. And if we're honest with ourselves, the dream isn't about owning MSTY. The dream is about passive, high-yield income that gives us a supplementary alternative income approach in this uncertain world that we find ourselves in today. And what I've shown you in this video is that MSTY is not as passive as we like to be, and it also bears a lot more risk than what people seem to believe it does. So remember that MSTY is also quite a complex product, and that means that there's a lot of surface area for things to go wrong with MSTY, right? Bitcoin holds geopolitical risk, legal and regulatory risk, while MicroStrategy is built on Bitcoin that also has fraud and misconduct, operational and executional risk, amongst others. And then MSTY and Winter also have the counterparty risk, including the leverage and the funding risk associated with them, as well as an operational and execution risk on top of that as well. And so that is where, when I talked about diversification, released that video earlier, that I said, hey, look, be careful about all these ways in which you can't quantify a risk, because the MSTY Winter product is very, very complex. So to recap on this video, MSTY and Winter have predictable characteristics. We measured these dynamics and built a model to simulate those 5 scenarios. And we concluded that it takes substantial bull movement in Bitcoin to maintain the MSTY NAV principal value over time, which is key to maintaining the 70-80% dividends. I discontinued the MSTY Winter rebalancing tool after realizing my existing approach would outperform all scenarios anyway, and I didn't want to take people on a journey that wasn't the most efficient. MSTY is not a passive income product, and the Mangosteen framework, while active, trades on average 6 to 8 weeks, and so it's pretty reasonable. You're not going to be glued to your screen. And remember that the point is to generate secondary income in these uncertain times, not own something for the sake of owning it, right? I'm not trying to say this is better or that is better. Both products will have a role in someone's portfolio. I just think it'd be great if you could join me on my journey to complement a portion of your portfolio. And with that being said, the Mangosteen original framework is Bitcoin-focused approach, a simple bullish, bearish approach. You don't have to be glued to your screen all the time. And I'm going to continue with a 40% discount for all you guys on the MSTY Gang forum, because I really do care about what you guys have been up to, and I think you guys really do need a helping hand at the moment. And I see a bit of panic that we have in the current market with this current flatness in the Bitcoin market causing this NAV erosion that we've just seen in the last few days, right? Now, I've had people come up and just say this is a cash grab. So in response to that, I've put a 14-day no questions asked refund policy. So if you do join, you do pay, you sign up, you watch the Mangosteen private videos, you play with the tools, and you get a feel for it, and you decide this is not for you, flick me an email in those first 2 weeks and I'll refund you. Don't worry about it. I hope you all enjoyed this video. Taking a simple foray into the quantitative finance side of MSTY and Winter takes a lot of time and a lot of effort. So I really do hope that you've appreciated this video and have learned something from it. If you do have some scenarios that you want to test, then let me know. Maybe I can put together another video. I've gone through the rigmarole of building the tool now, so creating another forecast is trivial. And if you've got any questions, obviously hit me up on my website, mangosteen.global, or X, or YouTube. Thanks again, guys. And as usual, my normal disclaimer, this channel does not provide financial advice or any advice of any kind. You must do your own research. Any investment or trading decisions you make are your own. This is entertainment only. You are listening to a random Mangosteen on the internet.